This is Alan Bush with ADMIS with the daily financial forecast for Thursday, September 10th. In the stock index futures, we did see prices trading lower in the overnight session. This linked to a weaker Chinese stock market, which declined for the first time in a couple of days. Some recovery, though, when we did have the August import price index coming in weaker than expected. In fact, down 1.6%. So this was bullish from a point of view of how it might affect Fed policy. Obviously, a weak inflation number suggests that the Fed may be delaying a rate increase. However, then futures moving back down again. Longer term, though, we feel that stock index futures will be supported by economic stimulus plans from around the world that are in various stages. In fact, we have the ECB talking about adding more stimulus. Now, more recently, the Bank of Japan, some talk there that they could increase their quantitative easing program. So economic stimulus around the world that is in place or likely to be extended or expanded will rescue this stock index futures market, and that's a long-term view. Over in the currencies, seeing the dollar index trading a little bit lower. Some fears that the Fed could raise rates, though really not supporting the dollar very much. We have the euro currency higher, even though French industrial production showing a decline when an increase had been expected. And the pound advancing, this after Bank of England policymakers indicating that the time is approaching for the UK central bank to raise interest rates. However, the work that we've done suggests, if anything, the time for a rate increase from the Bank of England is actually being extended or delayed. And the yen trading lower, this after an aide to the Prime Minister in Japan suggesting that the quantitative easing program in place there should be expanded by another 10 trillion. So more QE potentially from the Bank of Japan means lower short-term interest rates, which in turn means lower yen. And then in the interest rate markets, we are seeing futures mostly lower. We do feel that supply is somewhat of an issue this week, with the Treasury offering $58 billion in 3 auctions this week, with today's auction being 30-year bonds. Also, the probability of a Fed funds rate increase at the upcoming meeting. In fact, that's the meeting for September 17th. Now down to 21%. It had been a little bit higher yesterday. Our feeling is the Fed will not be in a position to raise interest rates anytime soon, which seems a bit contrary to what we are hearing from other analysts and from media sources. But look for the Fed to delay increasing rates, and I think they may not be in a position to raise rates until sometime next year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.